I think liquidity is a secret weapon because it gives you targets. And without targets, you don't know where price is going to go. So if you're on the wrong side of price, it's most likely because either A, you don't understand market structure or you don't understand liquidity. So I think those two go hand in hand. And if you don't understand market structure, I think that's key to understand first. So I actually have some videos on that. If you want to go watch my market structure 101, I think that's a good video to start. Understanding liquidity will give you direction for your trades and it'll make you a better trader, make you more profitable. It'll help you be more consistent. I don't think this needs to be very complicated. So let's dive into it. What is liquidity? Liquidity is like a big pool of money. In fact, that's what liquidity means. I mean, liquidity is like a fancy term for money. So if you just want to think of it like that, that's what liquidity is. It's money. And the more money that's in a market, it's kind of like having a big pool where you can easily splash around and trade without making big waves, right? Because you want to get in and out of a market easily. You don't want it to be difficult to sell your position or buy a position, right? You want to be able to get in and out. Liquidity is very important for market makers because they're able to push price in particular directions. We'll get into that in a second. But what creates this liquidity? What creates it are all the orders that you can, execute. Stop losses, stop orders, market orders, limit orders, any type of execution that you can make that revolves around money, which would only be these, is what creates liquidity in the marketplace. Now, let's go and think about this. What are traders taught? We're typically taught to place a stop loss and protect your stop loss with a swing level. So these places where you see swings are prime areas of liquidity. And when you think about liquidity targets, meaning, and I'll get into this in a second, but where are the pools of liquidity at? Where are most traders, right, putting their stops? They're probably putting their stops just beyond these swing levels. That makes a lot of sense. And so logically, since that's what we're taught, that's what traders typically do. So how do market makers, the big guys, how do they benefit from that psychology? The psychology here is very simple. The psychology is, hey, let's push price down enough to where the market starts believing that this is a sell-off and we start getting, retail traders to get behind us, and we'll push the price down into a level where we know a lot of traders have their stop loss. Okay. And, by using advanced technology, they can actually see where the majority of these stop losses are at. So they know this is a level to be looking for. So they'll push price into these levels. The algorithm will intentionally do this. And once these stops have been grabbed, have been swept, all of the market makers reverse their positions. And what they do is they start buying orders. So they're absorbing the sells in order to go in the intended direction that they knew they were going the entire time. Even though you have a change of character on this time frame, on a higher time frame, you would see that we are still in an uptrend. This is why I look for liquidity areas to get swept, okay, before I look to enter a trade. This is very important. So we'll go through the full breakdown of what you need to do when you hit the charts, but this is just important to understand the psychology behind, why these get hit. I think it's a good thing to understand. Let's talk about the 4 types of liquidity levels. So there are 4 patterns, okay? And these are the ones that I look for on the chart. I trade these almost daily. The first one are equal highs and equal lows. And this gets formed when price stops at a relative equal high or low. And what this essentially does is build up liquidity at these levels. So if I'm in a trade or if I'm wondering where price might go, this is a huge footprint for price. It's a huge key level. And I mark that on my chart, these equal highs, equal lows, especially on these higher time frames, like your 4-hour. And I'll walk you through that in a minute, but I'll mark these out and then I'll know, okay, most likely price is going to take out those equal highs or equal lows. And that gives me a very solid directional bias along with my structural bias. Then we have trend line liquidity. Essentially, as price is in an uptrend here, you can see we're making higher highs and higher lows. Okay. And what happens is you have different types of traders, like trend line traders, you have breakout traders. And in this case, your trend line traders are waiting for what? They're waiting for price to come back down and trade somewhere along these levels. Like, let's just say they want to get in as price taps the trend line, they want to get in going long. The problem that I see with this is that, by the time it's tapped 3 times, there's so much liquidity built up underneath these levels, okay, down here, that most likely what the market will end up doing is the market will end up coming down here, grabbing this liquidity, and then going in the intended direction. So if you've had that happen to you, now you know why. It's because that trend line liquidity is getting built. So in an uptrend, your liquidity that is above you, these levels up here, these liquidity levels, these are what we consider weak highs. Weak meaning most likely price is going to go past them and create a higher high, right? Because you're in an uptrend. It's not that I trade based off of just the targets, but it's good to know. So when I'm in a trade, I have a much better idea of where price is going to go. So these are two of my favorite, some session highs and lows, and then previous day high and low. So we'll just go through these real quick. This is representing Asia session in the purple. There's 3 sessions, Asia, London, and New York. The reason why this is so important, okay, is because during this Asia session, this is a consolidating session. Price has 3 phases, okay? Consolidation, manipulation, expansion, okay, or distribution. And so those are the 3 cycles of price. So Asia is very important because when we see Asia consolidate, we know that the next move is usually manipulation, and we know the move after that is distribution. So what is the manipulation? And this is where, we can go into this, but basically we want to see session highs and lows get taken, and those are high time frame liquidity targets as well. Previous day high and low, these are very simple, but basically you have previous day's high, previous day's low, and you can see that price just goes up there and taps, reverses, and then grabs a low. But the idea here is this right here. See, price is tapping that previous day high, then I would be looking for a specific thing on a lower time frame down in here. So say this was a 4-hour time frame. It doesn't matter. 1-hour time frame. It doesn't matter because you're just waiting for this previous daily high to get swept. Once price sweeps this, then I'm going down to a 5-minute, a 3-minute, a 1-minute, and I'm looking for this pivot. Okay, this reversal. I trade reversals. That's what I'm interested in. But this is very, very particular, very easy too. It's very easy. All right, so let's do a quick top-down analysis just with liquidity. Here we go. So I started the weekly. I like to look at just my previous week's high and low, and I can see that I had a low here from 2 weeks ago, and I can see last week's high has not been tapped. So I'll just pull those lines over and make sure that I have those on the chart. I will typically label everything for the sake of this video and time. I'm not going to label everything, but those I would mark. I'd go down to my daily and I would look at, any previous daily high or low that has not been grabbed. So here is previous day's high, previous low is grabbed, and then I would see yesterday's low has not been grabbed either. So we'll go ahead and mark that. Then I would look to see if there are any major fair value gaps. Now, this is something that I did not discuss, and I will have a separate video just discussing fair value gaps, but I will look for fair value gaps and see if there are any that we're trading into, which there is right here. So I will mark those out, and it looks like we inverted this fair value gap here. So that means price is bearish. However, the structure, if you just look, if I zoom out, you can see on a daily, we're far from breaking structure. So I need to move to a lower time frame. I go to my 4-hour. I'd notice that 4-hour structure has been broken to the downside. So where are the liquidity targets that I am going to mark? Okay, so I'm going to zoom in a little bit here just to make this easy. I'm going to look at previous 4-hour wicks that have not been tapped, maybe equal highs. So here I can see really easily, these are some equal highs right here. So I would mark those out. I would also just take note of any fair value gaps that we could be trading up into or down below us. So here is a fair value gap. I would mark that and mark it 4-hour. I would be looking at moving down to my sessions possibly. There is one other thing that I want to take note, and that is this 4-hour wick right here. So I would pull that over. I would have targets set up. So this is literally my little target that I use. I use this little target tool. A lot of times price wants to take out at least half of these 4-hour fair value gaps. I like to mark half of it just to see. A lot of times I will set alerts at these levels, by the way, so I'm not staring at the chart all day, and only open the charts when those levels get hit. So those are some of the most crucial levels that I see. Now I'm going down to my 1 hour. And I'm just seeing if there are any, fair value gaps. I'm noticing where structure broke. I'm sort of looking above, seeing if I can refine any of these other areas that I marked out on my 4 hours. So I'll just kind of refine that, meaning just get it a little bit more accurate. And then from here, I'm really looking at sessions. So my sessions, I like to go down to a 15-minute and turn on the Asian session range. I do have a special setting that I have. And you know what? If you're in my school community, you're going to get that setting. It'll be in a link. If you click the link, it'll open up this chart. You just copy this chart by clicking this drop down right here. You'll click make a copy right here. So what this allows me to do is see the sessions on the chart at a glance. So now I can see that, yesterday's New York session high was here. London session high was here. And because it was Sunday, we do have a weird box on Sundays. But previous days, you can see it's very easy to see and mark out. If I was going for my, let's just say my sessions before New York started, I could mark out that's London lows, and you can see that was swept and price reversed. Those are all of my levels. Once I'm done marking those, I will turn those off and I'll have these marked on the chart. These are my levels up above that I would be really looking at. Now, I don't do anything until price reaches one of these targets, and that's just how I roll. So tomorrow morning when I wake up, who knows where price is going to be, but this is how I would have lined it out if this was, tomorrow's session. I only trade during key times, and that's so important to understand. You do not want to be trading all the time. It's much easier to identify manipulative market maker moves when there are red folders on the books. So a lot of people say, don't trade the news. Well, guess what? Those are my best days. Those are the days with the biggest runners. Those are the days when the market just speeds up what it's already going to do. And we teach that in our school community. And in fact, anybody that's in the school community, you're going to learn about how time is more important than price. That's very, very important. I'm not going to get into that in this video, but if you want to see that, it's inside of the school community. And that's a video that you can watch about time and price. Very, very key. So a lot of trading is set up, hurry up and wait. I'll do one more from scratch. I'm going to go back on the chart. I'm just going to pick a random area and I'm just going to go back and see. We'll just pick a different chart here. Okay. And I'm just going to plan out right here. It looks fine. I'm just going to go right here and we're just going to map it out from top to bottom one more time. So it makes it really simple. Now you notice this Asian indicator. For those of you, watching this whole video, you get the secret sauce here. So this Asia session range indicator actually gives me the previous week's high. It gives me yesterday's low. So a lot of it, I'm just literally just marking out what's already there. I have yesterday's low. I have New York session low right here. So this is high time frame liquidity. I also have London high. London's up here. So I'm going to mark that out. I have previous week's high up here. Okay. I have London's low, as you can see. And you can see in this example, like I said, London took what? The high and the low. You could do the back test and you'll see that happens very often. My targets are going to be here, 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 and here. And if I zoom out, what trend am I in? Well, we broke structure to the upside. I'm in an uptrend. So I need to be looking and seeing for longs, right? I want to be buying at a discount. So if I'm going to be buying, it's going to be down here. So let me just play price out. Okay, what time is it? This is almost the market open pretty much right now. So the market opens. Okay, we take out the high. We get rid of that. And what are we forming here? What did we go over? Trendline liquidity, right? So we have some trendline liquidity being built up. Not a big deal. I don't trade based off of that. Look where price is going. Where do you think price is going? And this is where I think it's so incredibly valuable. Not many people show this because they don't want to be on the hook. If this doesn't get hit, oh no, I have a YouTube video where it didn't work out. But look, price hits that, no problem. So this is a key level. Now I'm zoomed in. Now I'm coming down in here on a lower time frame. So now I'm on a 5 minute. So I zoom in on a 5 and really I'd be like down on a 1, but that's okay. And let's see, it hasn't really given me anything yet. Nothing yet. Looks like it's just going to pump. Price can go past these levels. And if it hasn't shown me a sign of reversal and the things that I'm looking for, then I can just let it play out. So here we go. Let's see what happens here. Looks like it's just going up for the day. And now what time is it? It's 5:43. So it's 3 o'clock. I'm not really going to be trading much past this time. Looks like price is just going up, up and away. But you see, I wasn't faked out. I didn't just take a short right here. Although you could argue I could have probably gotten away with a little short, but that's not how we trade liquidity. How I look at liquidity is targets. And once those targets are reached, I'm looking for then my entry model. And my entry model consists of 4 things. You can learn it inside the school community. It's pretty simple. So I'm done at 3 o'clock, and you're going to learn, once again, time is more important than price. You can know all the liquidity stuff. You can know structure. If you don't understand time and price, none of this will make sense to you. So that'll be in a future video. I hope this made understanding liquidity and spotting liquidity and understanding exactly what you need to be doing when you hit the charts very simple. And drop comments, get involved. Let me know what you guys think. I will see you in the next video.